Okay, good morning everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, November 16th. Michael Boutros here with you this morning. Sorry about the delay there. Also, just wanted to do a quick sound check. A little bit of a switch up in the devices today. If I could just get an okay from you guys, if you can hear me well, I will jump right in. Okay, Peter, Pooja, Steve, thanks. Awesome. So, great to see everyone here in the room. We got a lot of exciting things to talk about. We're finally starting to get some gyrations here in the markets. We're getting slight rebound in equities after yesterday's sell-off. On the menu for today, DXY, obviously trading at a critical area right now as we speak. We'll look at the Aussie dollar, which is still holding on to support by a thread. Dollar yen, looking for exhaustion high there. We'll take a look at Kiwi. By the way, I've been messing around with an Aussie yen chart this morning, so we'll take a segue into that as well. And then yesterday's updates, obviously, we'll go on Euro, Sterling, and Dollar CAD. Euro yen, if you guys want to look at it, we'll take a look, but I'm really not interested in playing with that right now. It's kind of just been some back and forth. Also, some things that we talked about yesterday. Euro Kiwi still testing a major critical resistance there, so we'll take a look at what that's doing. Crude prices, I still think you get one last low before that thing turns, but we are approaching support. And then gold, kind of just holding key range there, but I still think there's some interesting things to look at on the intraday charts. So if there is anything I didn't mention or a trader setup that you'd like to review, as always, feel free throughout the course of the webinar to throw out any questions you guys may have. Eman, DJ, Mark, Peter, we got 3 Pete's in the room today. Pooja, Steve, Tom, Ziad, great to see you guys all in the room. Hey D, good morning. Pooja, Aussie dollar, nope, you didn't miss it. That was number 2. So we'll be on that right after we cover the DXY. First things first, not much data left on the week. We got weekly jobless claims, yada yada, some production data out later today at 9:15. I'm not really going to stress any of that. The markets are kind of really more focused on what's going on here as far as the tax plan, the proposed tax plan, what impacts that can have, what chances that has of passing. And we're really quiet as far as the economic docket is concerned to the end of the week. We do have some Fed speak on tap today, so do be mindful of that. Mester will be speaking later this afternoon. Where does that leave us with the dollar index? Well, the last time we covered the dollar index was here on the Tuesday update. And guys, this thing can't get any cleaner than it has. We added on this near-term descending median line formation. It seemed to be holding really well, and it really emphasized a break below 94. 93.48 was the initial support. 94 is resistance. All we've done is dropped into support and come right back into resistance. And the near-term picture on this is outstanding. Okay, so lots of clarity. It would suggest, again, 94 is a region to watch for resistance here. Even if we were, let me take a step back. Ideally, that high we just made holds. Okay, now again, heading to the end of the week, not really want to get too aggressive on it, but at the end of the day, if 94 holds resistance, would be a very, very, very nice and compelling test of basic former trendline support turned resistance. Just the cherry on top, okay, is that you have the median line there as well. Basic 236 of the entire advance, or excuse me, this is off the decline from the 2017 December high. Some former swing highs, nice little area of resistance. Even if we were to break higher, the weekly open converges just higher above the upper parallel. Okay, so that's the broader bearish invalidation level. Ideally, like I said, this kind of offers a little bit more resistance into the U.S. trade, but if we were to break higher, this trend line is what would invalidate the near-term down bias that we got with the break of that support, the break below 94. It was a nice downside break. On whole, the weekly charts couldn't be clearer either. So for the last 3 weeks, we've been talking about exhaustion, dollar index coming to former slope resistance, turned support, now resistance again. We spent 3 weeks up there, finally turned lower last week. Where are we finding support right now? Well, you have the median line for the broader formation we've been following, and then you have the 200-week moving average just lower. So the emphasis for the dollar index is really on a concerted break back below 93.50. The 93 handle is an area of near-term support I would also be paying attention to. That's a 2016 low day close. It's a basic 50% retracement of the entire advance. If you kick it out in time along the slope, that's basically heading into the start of next week. So levels are pretty clear. Watching for a reaction off 94 as we head into the U.S. Open, and just keep in mind, like, dollar has been getting bid into the U.S. trade session lately. So I do want to see how the U.S. markets open. Want to see a reaction at 94.03 max. You know what I mean? Somewhere around here for a reaction and a continued move lower. Now, as I noted yesterday in the sort of synopsis, the dollar pairs are sort of doing their own thing, okay? We don't want to take a blanket statement on any of the dollars, keeping in mind the index here is 60% weighted the euro, so you're essentially looking at euro dollar, which we will cover today as well. But I want to take every trade on its own merits at this point, especially where we're trading right now. Add to that the low that we made yesterday, or the test of support that we made. If you look at the daily chart here, for the dollar index. First, there was your trigger break early on that kind of put us on the bearish side, but you're also looking at the basic and objective 100-day moving average, which converges, again, same median line we were looking at on that weekly chart. Okay, so again, the weekly, median line, daily, you have the 100-day moving average, intraday, you have the lower parallel that we came off of. So a really nice spot to bounce. Question is this going to hold? And if it does, again, would confirm a downside break of that ascending channel formation. Questions on the index. I mean, if this doesn't get you excited, I don't know. It's pretty clean. So you don't get that too often. Look for a reaction here at 94 into the US Open. DXY, number one. Okay. Number two, I'm going to take the Aussie. We're going to go in the order of the setups from last night. I will hit Euro for sure. I still think Euro, we were looking for a dip a little bit lower to get long, both Jamie and I. I'm not sure if we get that pushback based on what we're seeing, but it would also reflect here in the index. So keep that in mind. Okay, if the index breaks higher, look for that Euro dollar dip into that last support in your 1725 ideally, for possible long exposure on that. That would take, again, the index up near the weekly open, possibly slope resistance in that scenario. But if this turns lower and Euro fails to make a new low into the U.S. Open, I don't want to get too aggressive on that. I think we might turn there. So we'll go back to Euro in a moment, but dollar index has pure clarity in it. Here's what the trades looked like last night. So Pooja, here's what the Aussie looks like. Y'all seen this chart before as well. 76.30 was the line in the sand for us. That was a huge level of near-term support. Again, just a host of fib retracements and considerations, the 52-week moving average, a parallel here for the same slope we've been following off the lows from last year, all converged right there. The break below objectively put us bearish. I can't get bullish unless we get back above it. Now, doesn't mean that we're just bearish to the hilt, because there's a huge confluence just lower at 74.76. The daily chart basically has it at the 75 handle. You're looking at that 50% retracement for the entire advance and a basic slope support off the yearly lows from last year. So very basic, and that would certainly invalidate the broader uptrend that we've been working with. And certainly on a break below 40 in momentum, if that were to materialize alongside that, it just wouldn't be a very, it'd be pretty damn bearish for the Aussie. That being said, the focus here is now on one of two things. For the weekly chart now, we're just focusing on. It's either a breakout back above, okay, that 76.30 barrier to get this thing back on the constructive side, or a reaction or a possible long entry on one final stretch lower into this region. So I'm just starting from the top-down approach here. So from, again, 1,000 feet up, that's kind of what the focus for the week is. If we close back above 76.30, I'd interpret that as constructive. If we dip back into this, again, I'd be looking for long entries. On the daily charts, certainly it shows something very interesting as well. Nope, this is 240. Okay, here's the broader formation we've been working with. That was, again, the technical significance of that region at 76.30, basic 618 of that advance from the May lows. You had basic trendline support off that low, and the objective monthly opening range. So if objectively a break of the monthly opening range on the 13th would have me looking for a late month low, okay, just on average. So if we were to recover back above that, it would sort of invalidate that downside focus. As it stands, there's 75. Remember, on the weekly charts, we were looking at 74, 76, a little bit lower. But you get the picture. Okay, long-standing basic trendline support off those 2016 lows, basic 786 retracement at the near term. Again, in the longer-term charts, it is a 50% off the longer-term low from the 2016 advance. So big stuff there. And again, I'd be looking for a strong reaction there, or possible exhaustion on the short side. That being said, what are we looking at right now? Well, you're seeing some slight divergence on the daily charts, and it's kind of fizzling out right into the lows. And you might have seen Jamie's tweet earlier. This low is not by chance. Okay, take a deeper look into price action. Here's the 4-hour looks like. A basic slope parallel of the same median line we've been following all last couple of months. If you take it to that low we just made last week, boom. Or this was last month's low, excuse me, boom. Okay, so you're getting a little bit of hesitation here. No change to any of the levels from that last night. Again, here's what the daily chart looked like last night. Still kind of dilly-dallying there. Here's the intraday chart. We're just consolidating below that 50 line and right above soft support at 75.71. Interestingly enough, guys, I was just looking back and I was looking at the last couple of reports for Aussie, and I was like, where did I get 75.71 from? It's such an objective target. Like, where did I come up with that? And this is the brilliance of just studying price action. Maybe we spend too much time with the charts, me and Jamie, but it's our passion, so it's what we do. But if you take a look back, just a basic objective swing pivot low. Okay, and it caught the lows really well there. So right now, as I said yesterday, I was looking for a reaction. Okay, right here, basically where we are, for the near term. We got a little bump last night. There was a caveat, obviously, with the Australian data. You did see a much weaker headline print for job gains on the month, but if you dig down deeper in the metrics, there were some caveats on both sides. A, you saw a huge bump, 24,000 plus in full-time employment, but the net job gains were so small because you saw a big contraction in part-time employment. So the overall job loss gain net wasn't that big, but you did see a huge shift into full-time employment. That's good from a structural employment sort of standpoint. So from the RBA standpoint, that's a welcome development. The caveat, or the thing that kind of threw everyone off, I think, and why price action didn't really do much, you saw a rally right on the data, right into that median line that we pulled right back, was that you saw the unemployment downtick. Pretty good and dandy, right? You'd think that's a good thing. But the broader labor force participation also downtick. So again, that contraction in the broader labor pool will typically put artificial downside pressure on the unemployment number. So you take that downtick with a grain of salt. Labor force contracted a little bit, or participation rather contracted a little bit. So the numbers were mixed at best. Wasn't really positive, wasn't really negative. The only underlying thing that was good was that shift into full-time employment. So long story short, guys, I don't want to bore you with the fundamentals anymore. It's basically a no. Okay, market's not going to act on that. That's done in the past. Where are we from now? We're still holding that key range. I'm of the mindset, again, if the dollar, does turn over a little bit more abruptly, as we saw the index holding resistance there, you could see a little bit more upside here, but I'm not trying to get cute on the Aussie. I'm really more tracking this one more so than actively scalping it. Like I said, if we drop down and get that drop into 75, great. I think it'd be a great opportunity to start looking for some exhaustion lows in price, possible scalps alongside. If you break 75.71, you get the opportunity for a rebound here to get short. That might be a small distance to play as well. But really, a better short exposure for me would be if we were to break higher, check the weekly opening range high, the underbelly of that basic slope support, and then move off would be a better entry for a short exposure against last week's highs. Or like I said, a rebound off this would be something I'm interested in too. So Aussie's kind of in the middle of the week here. It's, drifting lower, but you're not really seeing momentum give you too much conviction on trying to really get aggressive on pressing this. So I think we got to wait on this one, guys. I think we want to wait a little bit more for this consolidation break, at least near term. I mean, if you bring this into a 30-minute, you can see there's not really much to get excited about. If anything, you see a little near-term consolidation above support. So if you get a pop higher, look for recovery. These are still targets of which you'd look for possible exhaustion again. But really the emphasis is on if we do break lower for moving to that 75 handle. So Aussie's still flirting with disaster, Pooja. Do you have any specific questions on that? Let me know. Someone in here was holding an Aussie short yesterday in the webinar, right? I'm not sure if it was Aussie. It was too many trades in my head. No, I was wondering if her buys changed. Yeah, I mean, not really. 76.30 was a big move for me. As long as price action stays below there, it's either a bounce off this or a recovery. That would put me constructive again. Other than that, you have to stick with the trend. Eman says it's me, short Aussie. You cheers me up with the Aussie. Well, cheers on that, Eman. I'm sure you did well on that yesterday. I'm glad you did hold on. 75.71 was the target we were talking about, right? It hadn't really hit yet, and actually I was kind of getting teed off at this because it was kind of like it turned right ahead of it on that last dip, but then last night on the RVA print or on the employment print, you finally got that last stab into it before it recovered. So. Yeah, look for this near-term consolidation break, but below 76.30, despite what my gut feeling says, I have to stay objective, and it's just a basic break, and it's holding below support. I need to recover back above this to get constructive. The only thing, again, I do want to kind of highlight, if anything, from today's session is what we talked about or what we tweeted last night on SB Squawk. Where that bottomed was not random. So if we're following this slope, again, it gives us a little bit of a concern. You could see a little bit more of a rebound here before moving lower. Yep, it didn't hit 75.71, tiptoe move, and stuck with it. Nice, man. Cheers. Well done. Well done. Conviction and levels. I'm all about it. Okay. And by the way, that was kind of data-driven, right? That last spike, man. So sometimes it's better being lucky than than being skillful. Okay, so that's Aussie, number 2. I do want to talk about Aussie yen because I think it's really interesting. I was throwing around some levels today, and it kind of is starting to get me very excited. So we'll come back to Aussie yen in a minute, but let me just go over dollar yen. That was number 3, or number 2 from last night, but number 3 for today. Here's what dollar yen looked like. I wanted to give you, again, just a broader summary of this because we've been following. Like I always say, I always try to keep the weekly or daily charts, guys, always at least 1 or 2 clicks away maximum. So if you're following along with my personal outlooks here, you want to kind of just follow through. So anyway, I didn't have the dollar yen daily charts for the last couple updates, so I wanted to highlight where we were. Broader scheme of things, why we turned bearish dollar yen to begin with on the rip that we saw heading into the late summer months, early September, is because of a basic 618 retracement. Former swing highs for the year and a well-defined range. 1430 was a level that we were talking about for months. It spent 4 weeks testing that level before turning lower. Okay, so where we're trading right now, well, it's the initial part of where you want to start possibly looking for some exhaustion, and we started to see that last night or yesterday. You have the 52-week moving average here in dark blue and dark green, basically almost exactly where we tapped the low. Just lower, you have the 200-week moving average. Okay, so both of these levels would need to be compromised to sort of validate that a more significant high is in place here for dollar yen. Now, obviously, on the swing side of things, we're still holding that short. I don't want to interfere with that. So, guys, if you are, holding those types of, if you're holding that position, don't let me kind of sway you out of that. This is for the near-term guys, or if you want to take intraday positions against it. Long story short, here's the dollar yen in the daily chart. I'm looking for stretch in 1264. I love 1264. I don't know if we get it, but it would be a really sexy spot, at least on initial approach. Why? Well, even if this is just corrective and it's not a bigger turn in price, That would be a basic 100% extension from the decline. Also, an objective 50 line for the current operative slope. And again, we know the slope is in play already because we got 3 tags perfectly on the upslope here. So both of those converge somewhere right around 112.26 over the next day or so. Drilling down into the 4-hour chart, here's what it looked like last night. Okay, obviously last week, we were looking for the break below parallel support to get this thing going. It took forever after rejecting a big resistance. Again, that 1430, 1450 was the actual top side of the range that we were looking at. Quick failure there last week, really started getting this thing going. And here's where we kind of peaked out right ahead of this basic slope. And again, we don't want to put too much emphasis on this because it's only using 2 points. But again, further highlights 112.26. So here's the rebound. As I said yesterday, it looked like it had more to go. Okay, the intraday charts was showing a little bit more of a concerted rebound off that low we made in U.S. trade. And last night I was telling you guys, look, it probably has some more to go. We have it trading at 1285, but objectively, I want to stay bearish sub 1345. Okay, that's the weekly open. Heading into tonight, it converges on that basic channel resistance. So as long as we stay below this, I gotta stick to my guns. We broke an uptrend, a multi-month uptrend, and objectively, at least you'd look for a stretch into 112.26. So here's what dollar yen looks like now. Okay. Obviously, we traveled much higher. Again, we were trading at 1280 when I wrote that piece. We did get as high as 1330. 1345 was the weekly open. That's our near-term bearish invalidation level. Here's a nice little reversal candle. I don't know if this is necessarily the high, guys, but I am looking lower. Okay, that's just my personal opinion. I'm looking lower. Ideally, if it spikes higher, I want to get a stop against that upper parallel. If we break through the weekly open, we get through that near-term slope on the upside, I don't know what's going to happen. This thing could go right back into 1430 again. But as long as it stays below 1345, that upper slope, I'm pretty comfortable still looking lower. Okay, Jamie's stop obviously still unchanged at 1395, so that's just against the weekly objective opening range highs. So I like it. Okay, I like it. Any question on dollar yen? Nice hold of RSI 60 on the RSI, or nice hold of 60, excuse me, on the RSI and dollar yen, the hourly. Pooja, let me check that out. Yeah. Ooh, I do like that. A little near-term trigger price action too. Not bad. Yeah. Not bad. I mean, I like it. I'm in, so I hope this thing works. But I don't want to get too aggressive. Okay, I don't want to get too aggressive. The other thing I was looking at is I'm not really comfortable because the weekly opening range wasn't, as well defined in this. But if we look at this objectively on the hourly, here's the weekly open. If you count that as the initial weekly opening range low, we did make an initial test of it again before breaking lower. So if that's the opening range low break, then sort of a nice spot where we would fail right here, right? RSI holding at 60 further adds fuel to the fire. So yeah, I like it. I would leave room, just again, my humble opinion, Pooja, for this thing to get back into maybe the weekly open resistance, but I am looking lower. Now, on approach, 13, what is that, 1295, 13, the figure, I don't really want to stress that as a major target. If we start to hesitate there into the U.S. Open, maybe take a little off and hold on to the rest. But I don't want that to be a major pivot for you guys right now. It kind of sailed through it on both sides, so I'm not really worried. I really want to see that drop more so into 112.26. And again, the upslope support there is also going to be a very critical reaction point. Final questions on dollar yen. Going once, going twice. Sold. Okay. Moving along to okay. Let me take a quick segue now. I wanted to do Kiwi, which was next that I covered here, but I just want to show you since we looked at Aussie. Trading at a critical support region. Okay, really needs to make a break here with either recovery back to 76.30 or a drop below, finally giving us that 75 tap. So with that picture, dollar yen, well, looking for exhaustion, right? I do want to see this thing start to really push a little bit lower with more fervor. So what does that put us on Aussie yen? Well, here's what Aussie yen looks like, interestingly enough. Again, I was just messing around with this. I don't have any exposure on it per se, but I'm looking at two different slopes here. Very, very subtle. So let me just go over this real quick. Basic trendline resistance off the yearly highs. That slope extended off of these lows, again, suggests that this break was pretty big. Here was 100% extension off the highs. A basic 50% retracement off the yearly low, so it encompasses all of 2017 price action, and the 200-day moving average. So you'd think an objective confluence like that would be a pretty big pivot. Well, we broke below and we did see acceleration. Here's the upside tap, and this is why this is important for me right now. On the daily chart, if we were to cover back above this on a daily close basis, that would forgive this as a near-term false break. But as long as we hold below 86, that puts us on a little bit more of a bearish path, still targeting confluence support here at 84.85. Okay, that's a basic 618 retracement of the entire yearly range. It's a 138.2 extension. Not really extension I stress too much, but since we saw reaction at the 100, okay, mic check. Am I back? Okay, now says Mark. All right, Pete, thanks. Pooja, thanks. Eman, okay, yeah, I think we're back again. Okay, great. Sorry about that. I knew something was going to go down. Okay, so um, where were we? Where did I lose you guys? So the emphasis is on 86. The 138.2 extension, Pooja, is from the high. Boom, boom, boom. And again, the reason I look at it is because we got a definitive reaction off the 100. It's acting as near-term resistance. So the 138.2 of that same extension takes you right onto the 618. So again, I'm not going to stress the fact that's the 138.2, but the fact that it converges dead on with the 618, well, I'll pay attention to that. Now, add to that location, guys, is like I was saying right before I think the audio cut, is that same slope. Same slope. Well, if I take that to the actual previous high we made in July, perfect touch, perfect touch. We did touch it again on September 8th. We turned lower before breaking and accelerating. That same slope converges on that same level. So long story short, if 86 holds as resistance, look for 84.85 as support. Or at least on a downside break, that would be my next objective downside target. Now that would be really sweet. And I think you get confirmation on that if Aussie finally makes a break here and finally drops into this key region. Okay, again on the daily charts, same type of gig. If it breaks here and drops into this key region, we're already looking lower in dollar yen, so that's yen strength. So watch that Aussie yen setup. I'm not really sure how I would want to attack it yet, but that's kind of what I'm looking at with Aussie yen. I got really interested this morning. Here's what it looks like on the intraday. So on the daily chart, again, just real quick, we're focused on the basic slope off resistance. Okay, it's a different slope than I'm going to show you right now. On the 4-hour chart, a pitchfork, okay, off those highs looks pretty decent. And in fact, if I take a parallel off that same high, So the same structure and extended off that low we made back in October, well, could be a decent area of which you find a little bit more of a support bounce before this turns lower. So I'm looking for either a bounce to sell, or if it breaks lower, I'm going to try to see if I can't get that move into 84, 85. It's a real sweet spot. Again, the daily chart really highlights some pretty significant stuff there. On the weekly, I haven't actually checked it. Let me see what this looks like. So on the weekly, okay, this is interesting too. So a basic pivot trend line we've been looking at. Support, support, support. This got us all confused, but the weekly objective or the yearly objective opening range low held, and the 52-week moving average, perfect tag of support. Outside reversal week off the low put us back on the long side. This break was big. Look what we're testing here. So I wouldn't be too surprised, again, if we get a little hung up here, a little bit of a bounce, but ultimately it would be a nice break. It would be a nice break. Questions on Aussie Yen. I have 85.08 as horizontal support level ahead of that Aussie Yen. What level is that now? 85.08. Okay, so you think you're looking at this, the swing high that we made back here in June? Could be a level to pay attention to, Pooja. I would tell you, well, first of all, it's a psych level, right? 85. Anytime you head into one of those major psych levels on like trades, especially like Aussie Yen, you want to pay some attention, give it some credence. So I'll tell you why that whole level is important. 84, 85 is what I was looking at, but I'll tell you why this whole region is important also is because you have the actual weekly open close for the week. First close is right there. The actual close was 84.96. So we're just splitting hairs here, but I agree with you. That whole 85 area is just littered with stuff. Littered with stuff. Weekly open close for the year, median line support, 618s, 138.2s, whatever you want to call it. Again, that swing high that you were looking at, June, adds further fuel to the fire. But yeah, pretty big region. Okay, so I just thought that was kind of interesting there, a little piece on Aussie Yen. I'd throw that out for you guys to track. So that was number 4. Back on track, number 5, Kiwi dollar. So Kiwi's moving back into a major support region. I went over the charts again on this one, top side down from the weekly all the way down to the 4-hour. You know, again, objective stuff. The best way to do it. 2016 open. Okay, that's what was it? 68.27, 68.30. You have the objective yearly opening range low. You have the objective yearly low day close or low week, excuse me, close. All right here. All right here. Broader picture remains bearish, sub 70 into 78.30. Downside break from here. Your initial target would be just the 67.16. Okay, so pretty clear cut, and the emphasis on this trade is if we're finally able to break below the 68.27, 68.30 region. Okay, looking at it from the daily chart, here's what it looks like on that. Okay, 2016 low day close. So not only the low week close, but also the low day close. Nice little nestled area of support. You also had the 50 line for the current operative slope that we're working with off of the highs from last year. Okay, caught this, also converges here, and the emphasis is on a break here. Basic 618, initial target 67.41. And again, you have a soft target there at 66.75. This is former swing lows from last year in May. You might notice that there's 2 different 618 retracements here. And the reason for that, guys, is because I went over this yesterday, but I just want to make sure you caught that nuance in last night's update. I don't really like using emotional lows in price action to dictate my fib levels because different liquidity providers will have that low at a different tick precisely if it's on a really emotional play like that. And a lot of times I'll just use the subsequent major low. So on this one, the 618 comes in at 67.16. On the daily chart, comes a little earlier at 67.40. So just keep those two targets in mind. On the downside, I'd want to see a reaction. I'd want to be looking at price actually as it approached both of them. But the whole trade is all based on a break below 67.30. If that wasn't enough, everything I just threw at you with the yearly opening range close and the weekly low close, it's just the objective monthly open and the monthly opening range low. So even if I were to forget, even if I was blind to the weekly charts, I wasn't even looking at the daily charts, and I was just looking at intraday charts, it was last month's low, it was last month's close low, it's this month's open is exactly 68.46, okay, top side of that region. And the low for the month is 68.38. So we're there, guys. We're there again. On the near term, we turned our approach down to the downside late last week with this break. Again, the update highlighted from last week that we were looking for a break below 65.20, 65.15 to get this thing started to suggest a high is in play. So once you got that break late last week, we've been looking at lower ever since. Initial targets at 68.73, that got taken out. Again, the bottom side target is that 68.28 level. Huge, huge region of support, guys. So we really do need to make an assertive move below that. The broader bullish invalidation, or bearish invalidation level still remains the 70 handle. So yeah, if we were to break back above immediate support right now, immediately heading into the U.S. Open, I want to see a reaction here, to be honest with you. October low day close, nice little pivot, 68.73. It's also the median line at this point. But even if we were to break the weekly range highs, you still need to get through 70 for this thing to get bullish. Bottom line, that slope line also caught these highs here, converges there. It's the only thing that would put me bullish, Kiwi. Other than that, it is a downtrend at support. So any rebounds you get from here are likely to be just corrective, and a breakdown at this level is likely to see acceleration of the broader downtrend in Kiwi. Finally, some clarity in price, right? Jeez. It's just what you do from here. You've got to be very, very patient because you're coming into those key levels. So either we get the rebound, we get a better opportunity to sell, or if we get the break, if you're holding shorts, I just be looking to bring my stops in. I want to see if we can push through the 68.30. But if you're looking for new short exposure, this is not necessarily the time I'd be looking for it. Your stop would need to be against 69.19, 69.20. It's already too far out for me. Questions on Kiwi? All right, let's pick up the pace here a little bit. Number 6 will be euro dollar. Here's what euro looks like to start off the session. Interesting level where we found some support. Not ideal from the swing side of trade where we want to kind of see this thing cut into 17.25. I know Jamie was looking at that same level. Intraday price action highlighted a basic slope support there. So it's still a sweet spot, if you will. But look where we just bounced. I haven't changed a damn thing on this trade, guys, since earlier in the week. Here's what we look like on the open. So this is this basic slope line support right here. We broke higher through these initial targets. We went right into 18.58, then turned right off it. 18.58, reversal right back. So break of basic slope resistance. And now we're checking that exact level as support. So again, I hate to see it. I don't know what to do. I want to be long, but if we break lower from here, that's 17.25. So that's a 50 pip stop. I'm not really, again, a little bit bigger than I want it to be, a little bit bigger than 50 pips at this point. So look, with what's going on with the dollar, I wouldn't be surprised if this kind of sees a little bit of a rebound and then does finally clip that low before moving higher. But for me, it's either a break back above 18.21 to get this thing on the continuation pattern, or if we see a little fizzle out here before this, we might get that final opportunity to get long back at 17.25 as planned. So a little shaky on near-term price. Still like the broader upside in the euro. But again, looking at this from a daily chart, a little bit more reason to cause, or a little more cause for some angst here, some concern. There's the lower median line parallel. Okay, so yesterday we were talking about this advance. It was pushing through, and certainly for me, that kind of would have had me keeping looking higher. But the fact that we reversed and closed lower on the day, bring this into a line chart to see the closes, and it looks like a perfect break of support and check of resistance. So I'm really torn in euro here, guys. Gun to my head. We broke the downslope, and I don't think that head and shoulders pattern is going to be validated at this point. I don't think it's going to pan out. So I am looking for a reversal higher. Dollar index at resistance. So it would make sense, but the area of which we're turning from has me a little bit more concerned on the near term front. Questions on the euro? It's either a definitive move back above 1821 or a drop into 1725 would get me back interested on the long side for the euro. But that being said, I'm not interested in playing the short. Okay, that's number 6. Number 7, pound. This will make a move, and it will happen at some point, before I'm old and gray, but the levels are just unchanged. Nothing changes on this. The consolidation is testing the upper bounds of that range. If we do get a break below 3 or above 332.21, I'm going to start looking to play that long side exposure we've been trying to do all week long, or all month long, I should say. But guys, just a big critical area of support. I mean, it's as basic as you can get. You had the lower median line parallel. You had the 100-day moving average, both of which offering some support. Range highs here haven't gotten taken out just yet. The real concerted break above the monthly open, okay, 32.87, 32.82, or excuse me, 32.72, 32.82, the monthly open. Everything's right up in that slot, so that's kind of the break I want to see to really get things going. But if this upslope is going to hold, we got to hold this week's low. We got to hold this week's low. So patience may be yet required here in sterling, but I do like and favor an inevitable topside break. Now again, you'll note Puja, the 60 is holding a resistance here. So it might have a little bit more pain in the trade before it kind of turns up, but 3060 is still going to be our near-term bullish invalidation. As long as you stay above that, I want to see this thing pop. Questions on cable? Okay. What was next? Dollar CAD, number 8. So Looney's doing its thing too. We're looking for possible signs of topside exhaustion, i.e. a short entry. It could be coming, could be forthcoming. You'd know where to look for the break, basic trendline support or channel support extending off that low from September. It's been a very, very nice play. Perfect touch of support here. That's kind of the break I want to see materialize to start getting this thing going. But a couple of levels that we were looking at in dollar CAD earlier in the week are sort of in play. So we went over pound, by the way. No change to any of those levels. We pulled back, we came back, we're testing. Got to see that break above 32.21 in cable to get it going. But dollar CAD looked like this early in the week. So the August high at 127.78 was a level that we were still looking at. If you recall in the update, we were saying, look, it broke basic downslope support, okay, and we tested it, or basic downslope resistance rather, and we tested it as support. So, you'd have to just let this thing start to drift a little bit higher. Interim resistance still 27.78. If dollar CAD is heading lower, I want to see price hold below 28.30. Now that 28.30 level was adjusted just a tad down to 28.21. to account for the new low there. But long story short, I'm looking for signs of resistance. I'm looking for signs of exhaustion. Short entries at both of these levels. A break below the trend line, basic slope support would get this thing going. Initial targets, 2663, still the same level from earlier last week. Okay, that now converges on just basic slope resistance. Turn support, be the first target. And again, I'm going to choke this up here. More immediate focus would be back on the 26 handle, 2599, 2590. Pooh just has another candidate for a strangle, pun intended, pound dollar. The other being gold. Yeah, we'll go over gold too. That thing's doing the same thing. You kind of have an opinion on it, but it's just holding the range, sliding toward that opinion. So it's kind of, yeah. You know, it's very rewarding when these really frustrating trades finally do pan out or finally do break out, even if it goes against my opinion. I honestly, but you know, when they get all coiled up like that, the markets typically will make a strong move on that. So we'll look at gold in a second, Pooja. I completely agree with you. But any questions here on dollar CAD? I'm looking for exhaustion. I'm looking for exhaustion. Kind of like where the momentum barrier turned off on this 240-minute chart. A deeper look at price doesn't really have a reversal type of reaction off it, but even had some divergence heading into those final highs. Price action making a higher high on a closed basis, the oscillator making a lower high. So, you know, look for a break of this slope is all I can say to get this thing going. One last stab to the high. Again, 128.21 is what I want to stay below for me to continue to favor the short side on dollar CAD. You know, while recognizing clearly that that's, you know, former swing highs, a basic 618. And on the daily chart, you know, if we were to make that kind of break back above that region, it would leave room, you know, for a rally right back up into the 29s and change. So not my ideal scenario, but we certainly need to leave that possibility in hand if we do break above 28.20. Questions on the loonie? That was number 8. So real quick, I do want to go over gold and crude, but I have here notes on Euro Kiwi. Is that right? Euro Kiwi. Oh yeah. Oh right. We were looking at this yesterday. Here's Euro Kiwi. Big region of resistance. It's still holding. It's still holding. And I don't want to attempt a trade on this, but I just want to let you know with our you know relative biases on what's going on the cross pairs versus the dollar, a break to the upside here above 72 would have big implications, in my humble opinion. You're looking at the objective yearly highs. You're looking at slope resistance. You know, it's just a critical region. Now, I showed you this yesterday, and we added this really sweet parallel in red. This is a basic parallel of the same slope we've been working with all throughout the course of this year. Okay? And if we extended off the highs that we made there in May, it literally kissed the perfect high there, confluence resistance with the 764 retracement at 72, 71.98 to be exact. That's basically where we're trading right now. So if you see a topside break above this, you know, you have room into like 73.50. It's a bigger ATR trade. How would you go about playing that in a you know, responsible manner? I have no clue. But I just wanted to highlight it because if we turn out being wrong on the euro, or the Kiwi does, you know, find some major support off this big level versus the dollar that we've been talking about, then it might actually be a decent short trade. I don't know. All I know is this is a huge inflection point. And if we do see a daily close above it, get ready for that ramp up. You know, this would just be an initial target. I really would think this had, you know, such implication would have lots of upside swing to go. And with the same respect, if you start to break down, you know, you got initial support at the monthly open. That converges on the 50 line. That takes you all the way down to 70 handles, another 180 pips from where we are. I'm sure I'd find a scalp or two in there to get in. So just wanted to bring it to your attention. It's a real big level. It's a real big level. You know, you've been getting divergence all up in the near-term charts into this high. I've been tempted to play this short side, but you know, I don't want to start calling highs here just yet. Just know that the near-term immediate upside bias is at risk while below this. With the same respect, this is going to be our clear-cut sort of near-term bearish inval. Not that we're bearish, but you know, a break above this you'd have to be looking for, you know, much more conservative rally higher up towards initial targets just at that parallel. Let me copy that here. Okay, so that would be like 76.30s or so. All right, any questions here on Euro Key? Number 9 for today. So really quick, gold, yeah, strangle, that thing is a good term. It's a good term, Pooja. So look, there's really no play here for a longer term player. The only play is for range bound guys. If you're a scalper, if you're a near term trend guy, yeah, selling at resistance, we're buying at support. 1263 is a major threshold we've been talking about for a long, long time. It's a 618 retracement from the advance off the July lows, but it's also the exact 200-day moving average and former monthly swing lows, okay? So back here at the start of October trade and right again at the end of October trade. So big area of support. The monthly opening range is taking shape just above. Our broader bullish invalidation for the entire gold trade is down at 1240, and that hasn't changed for months. Here's what gold looks like on the weekly charts. 1240 is represented by such a huge level. It's a 50% retracement of the entire advance from last year's December low. It's the 52-week moving average. Okay, it's the 618 extension. If we were playing a 618 off the high here, all of that converges here and would necessitate a break of basic trendline support off the yearly lows, off of last year's December low rather. So for me, even if we came into the quarter saying even if gold continues lower, which we were bound to see because that was a big reversal off resistance, that's our long-term bullish inval, 1240. So keeping that in mind from the weekly charts, going into the daily charts, you come into the month saying, hey, 1263 is support. It's a 618. It's the 200-day moving average, respectable moving average. I'm not a big moving average guy, but certainly I do respect them as near-term pivots in price, support, resistance. And when they converge on Fibonacci, hell yeah, I'll pay attention. So 1263, 1267 is still key near-term support. The monthly open comes in just above that, and you saw a reaction there earlier in the week. Opening range highs for the month, it was really 1288. We kind of probed right through yesterday, but we closed lower. So you're absolutely right. We are just sitting here in a key range above near-term support. Intraday looks a little bit more interesting. I do have this near-term upslope. I don't have too much conviction on getting heavy on it, but it's got 3 tags of resistance, if not 4. 1, 2, 3. You can count yesterday's 4. And this slope, my friends, is derived off of these 2 lows. That's where I got that gradient from. So we take that gradient, extrapolate it to that high, perfect touch, perfect touch, perfect touch. I don't know what to do with it. We started to look higher because the break above this descending channel formation was tested twice as support. That's a pretty strong conviction break of resistance, test as support, you look for a new high. Technically, we did make a new high, but it pulled right back. So look, if anything, I'm buying pullbacks in gold. Okay, that's basically the theme I'd be moving forward with. Ideally, you want to pick and choose obviously your entries. Strongest entries would be against the weekly opening range lows, if not, this low, which would necessitate a break of this trend line. But moving forward, I do think you make another stab, but I think you look to fade that weakness for another push higher. That said, guys, let's stay as objective as we can. Here's the November open. November opening range low, November opening range high. Look for the break. I try to just break it down to dumb status. Like when things get messy like this, take a step back, take it back to basics. Yeah, the slope broke to the upside, so I'm looking higher, but we've got a clear-cut opening range for the month right above support. Look for that break. Make sense, Pooja? I am off the option station. All right. Questions on crude. Last but not least, I'm running to the end of the session here. Last but not least is crude, rather. Here's what crude looks like on the daily charts. Okay, so the dilemma here is near-term support. Bullish invalidation for the broader 5380 hasn't really changed. We went over this yesterday, I believe. So I just wanted to bring into attention, again, that near term, we're kind of still holding that near-term support structure, monthly open support, that whole region to 5450, 5474. So watch that as near-term support. If we break lower, I feel like this kind of needs to make another low before we retract higher, but bullish and validation still down at 5380. As long as you stay above 5380, you're constructive. Why? Not just because it's the yearly open, but it's also the objective monthly opening range low, and it converges right on slope support. So that's the only thing that would put me bearish. Other than that, I'm looking to fade another spike lower. The daily charts, as far as resistance is concerned, I know this might seem arbitrary to you, but from a slope standpoint, it's this region right here is 56, and it's also a psych region, is what I'd want to see clear to the upside to sort of mark resumption. On the intraday charts, again, there's the reason I'm a little concerned that you could get one stab lower before you turn. But 5380, 5394, still we're going to stay constructive all above that longer term. Questions on crude? Okay, guys, that's everything on my list for today. That was number 11. If you have any last-minute questions, do feel free to throw them on the message board right now. Quick messaging note, guys, I'm going to be out next week for the holidays. All the updates will still be published at normal times, except obviously for Thanksgiving night, Thursday. But as far as the webinars are going, I'm not sure I'll have a setup where I'm going. So I will let you know on keep your eye on the daily webinar schedule here. I will update the homepage as soon as I find out. That being said, guys, I will have a webinar tomorrow on daily FX. Foundations of technical analysis, but since I won't be here for webinars at all on daily effects either, I'm going to turn it more into a strategy outlook for next week. So I encourage you all guys to come there to get a last look update on the charts before we move into next week. Other than that, could we please have recording today's webinar early? Sorry, my mind mixed numbers upside down a little bit, says Eman. Oh, no worries. I speak a little fast, Eman. I will have this updated as soon as possible. It takes me a minute to render the update, so as soon as it's up, I'll get it there. Peter, happy holidays to you as well. If I don't talk to you guys, if I don't see you tomorrow, I wish everyone a happy holiday next week. If you're celebrating, be safe, God bless, and I will see you. Keep you updated on the members homepage, but if not, I'll see you the following week, guys. We'll keep you updated with the swing and intraday updates as normal. Thanks again for everyone. Katarina, Pete, thanks for everyone. Eman, same to you. Have a great weekend, guys. See you next week. Cheers.